Hi, fellow traders. Hope everybody had a great Monday. It was a pretty slow day for day trading, especially my strategies, which made it exceptionally slow trading out of a small account because obviously our hands are going to be tied, our opportunities are going to be limited. So, it was a nice welcome back, and got to feel all of the stresses and getting mad because I can't do this and I can't do that. But that's the reality of having to trade small and building who you are. I mean that's what it's all about. Everybody has a different clock. You got to wait for your own time because everything in life happens to our own time. To our clock. You may be looking at other traders and think that they're ahead of you and how much money they're making and how far advanced they are and just spitting out terms and all of that stuff. Or you may feel that some people are behind you, but they actually aren't. But everything happens at its own pace. They have their own time clock, and so do you. So you have to be patient. It's going to come. Everybody knows who Mark Cuban is. The owner of the Dallas Mavericks. He's a billionaire. But when he was 25 years old, he was a bartender. And he'll tell you, he used to live out of his car. And look at him now. Because he wasn't worried about a timetable. All he was worried about was getting out there grinding and making it happen. It didn't matter when, he just knew it was going to happen. The author of Harry Potter, J.K. Rowling, she didn't get published until she was 32 after she was rejected by over 10 publishers for that book, or that, not the whole series. So everybody knows who Jack Ma is. If you're in the stock market, you know who he is. He didn't start Alibaba until he was 35. What's that guy's name? Steve Carell. He's an actor. I think he played in The Office and, funny guy. But he didn't get his big break until after he was 40. Morgan Freeman, another incredible actor. He didn't get his big break until he was 52. And all of these guys will tell you that they worked hard. And it wasn't how soon they made it. The key was that they made it. And that they were going to work hard and do what they needed to do in order to achieve their goal. So it doesn't matter how long it takes for you to have your breakthrough in trading. What matters is that you're in sync with your time clock. Because if you're not, you're going to miss some key elements and opportunities along the way. So don't let anyone rush you with their clock because it's on their time. A true teacher is not going to tell you you should learn this in X amount of time, because that's not the case. Everybody has their own time clock. Everybody learns at a different pace. Everybody takes information in at a different pace. So if somebody tells you if you learn this and you can be up and running in 3 months, you better watch yourself, because it's gonna hurt you. Einstein said not everything that counts can be counted, and not everything that's counted counts. So you keep your eye on your own clock and you maximize your potential. You wake up every morning and you grind and you do it for you. Now, I'm not saying you keep throwing money away, because you don't have to. That's where the simulator comes in. And if you can't trade, you need to stay in there until you can. And if it takes you a year, then that's what it's going to take. But you have to do it. You have to do it for you. So just remember, you have your own clock. You march to the beat of your own drum. And you're going to get there. All right, so let's look at what we did in our tiny account today. There was a stock that we had on watch, and I'll talk about that in a minute because that's the one that I did an all-day hold on in the swing account. But I was hoping that that would set up and give us a day trade, but it didn't. And so I kind of looked around, and I know Twitter was moving early with Twitter, Netflix, Facebook. Who else was it? Bava, Tesla. They were all moving early. So Twitter fell within our price range. That's one of those stocks that we could actually trade. So once it's set up, here is the 5-minute opening range. We put in this, we bounced, we sold off, and we got below the 5-minute opening range here. We bounced, came back, and I felt I was patient and got in. Here's a 5-minute opening range low. I got in here risking on it, great entry in terms of, allowing for a nice stop. And we got in, and it was, then we started this chop mess. We had nice price action here, then all of a sudden, we just started this choppy, slow road to China crap. But you had to hold through it because at no point did this technically tell you the trade was dead. It stayed below the 9, stayed below the VWAP, the 20. I mean, technically there was nothing wrong with this. So we held it. This came within 1 cent of hitting my order. 1 cent. And I should have manually taken it because you could kind of feel the shift. But I'm like, well, this is probably going to do what it's done all morning. Go back to the 9, pull down, go back to the 9. Maybe we'll get a little bit lower and I could take it off, but it didn't. And so as it was recovering, I had to go ahead and take it off. I wasn't going to let it sit there and just run and stop me out, which it would have done. So I got out of it pretty much break even, I guess. Well, $20. That's practically break even. But we never really got a solid move to where taking profit made sense. It came close, and I could have clicked it here when it came close to my order. But other than that, it just didn't do. No, sorry about that. Everybody's wanting to call now that I'm doing my video. But that's that was that on Twitter. It was kind of frustrating because of the price action. It was just ugly. And you just had to sit there and hold and be patient. And if you're a new trader and you want to get in this, you just want to make some money. Some people took it off early and probably made more money than me. But for me, that's not a habit that you want to get into. It's not a habit. So, I feel good about what I did. If this happened tomorrow, I'll do it tomorrow. I don't want to get in the habit of cutting trades off too soon because when the real profit comes, I won't be in the trade. And I want to be in the trade. Let's see, the next trade was W. All right, so W, this was a news play, okay? And we had the nice sell-off. And damn if W didn't do the same thing that Twitter did when we got in it. Nice move, and then it just starts to trade sideways and just kind of bounce around and couldn't. The same freaking thing. But guess what? After 3 o'clock, after I'm gone, you know, excuse me. Sorry about that. After I'm gone, it drops and it does the move. Gets right to 62 and below. Just what I was looking for. It went right down, you know, as soon as I had to leave. So we had the right idea. The problem is, you know, being in this account after 3:30, I have to kill it. And that doesn't work well with me and trying to monitor it, you know, on the road. So, you know, that's what happened with W. But it did eventually do exactly what we wanted to. Would have been a nice payoff. But, you know, here again, me having to leave at 3 and, you know, not having a bigger account to where I can let it run till 4 kind of came back and bit me. And that's what I was talking about. Some of the issues that we deal with, you know, trading with a smaller account that doesn't really have any, we don't really have a lot of buying power. And that's what we need in order to hold stocks. You know, Sure Trader has that 3:30 rule, so you know you gotta be there. So today only 21 bucks. We're not red, which is good. And I didn't cut the trade off too early, you know, which is good. So, you know, as far as execution, I think I did a great job, you know, executing, not taking it off, you know, just to get a couple of dollars. Waiting, letting the trade work out, and it would have worked out on this one. On Twitter, it didn't. It wouldn't have, but you know, hey, that's trading. All right, so the one that I was looking at this morning, you see, we had a huge gap down. And I'm showing you this on a 5-minute chart because I wanted to be able to show you why we couldn't take it for opening range trade. But you see, we had a huge gap down, a little bit of recovery. When I felt we were coming back, that's when I got in for, you know, the all-day hold. And had it not hit my targets, yeah, I would have continued to hold it. But, you know, here we got in, and of course, we have the opening or, you know, leading into the open push. You know, no big deal. We're all below the 20. We're not claiming anything. So we finally, you know, we don't get the big drop at the open to take me out. Oh, we did, but it didn't take me out. It didn't hit my order. It didn't hit until we got over here. And it hit my order, took me out. And then, you know, once it hits, I have to go back, you know, log in and put my stop back at break even. And here, this was a little volatile. I had 11-cent slippage on it. You know, I had my stop at 47. It, you know, took me out the rest at 47.11. I just realized these times are jumbled a little bit. All right, but I got back in it here. You know, once we did that push, I started to jump in up here, but I was like, nah, let me just wait. And because this is where it runs up around lunchtime and then we start to sell off. So I got in, and it wasn't long before I hit my first target and ended up getting stopped out at break even again. Allegedly break even. But, you know, hey, it is what it is. I got 46.22. I actually had my order at 46. And we had a pretty big slippage on this deal, on this one. These, when it started to run up, it shot up, which, you know, you have to protect yourself. So this did stop me out, and eventually we rolled over. I don't think we got below 44, but my next target was 43. But I didn't have a choice. You know, I'm not watching this all day. I'm just letting it run its course. You know, the goal is to hold it, let it hit its targets all day. At the end of the day, take it off wherever it is. But, you know, sometimes when you have days like today, the market is a little iffy, then you're going to have things like this. So the reason why I couldn't take this for opening range, and we're looking at it for opening range, because I felt if it settled down and the spread came together, I could take it. But you can see it put in this huge candle. If I use the base like I normally do, here was 46.43, which was the 52-week low, and this was a solid level. So there's no way I was going to short into that. It was going to have to be below it. And see, we didn't get through it until well after 10. And I don't trade opening range breakdowns after 10. So there was a no-go on this. Plus, we were already working on Twitter. So, you know, there was no opening range trade. But this was the only stock on my watch list. But did get a nice hit on this. You know, 1637.03. I think I could have traded it a little cleaner and picked up a little bit more money, but I'm happy with it. Not gonna complain. So guys, that was my day. We're looking. I know it's gonna be slow for the next 2 weeks. I know it because this is the lull leading up into the next earnings season, and we don't have a lot of stocks reporting earnings. The ones that are, a lot of them aren't big names. They don't have a lot of volume in them, so they don't offer much opportunity to trade. We have to look for stocks that have catalysts like this one did. You know, it got a letter of rejection for one of its drugs. So this is what the catalyst that caused this. You know, we just have to look for other catalysts, and those are a little bit more trickier to trade. You know, I like trading earnings catalysts because it's smoother for me. I'm more consistent with them. Here, you know, it's hit and miss, so to speak. So, you know, I'm pretty pleased that we were able to really get something out of this one. So tomorrow, you know, for the next couple weeks, we're gonna continue to go. I love that it's slow when we're first getting started because it allows me to talk and point out things. You know, we talked about patience today. You know, we looked at, you know, I tried to show you what to look for when you're looking at the chart and you're watching candlestick formation and you start to say, hey, this looks like the candle, this price action looks like it's trying to reverse. Then you go and you look at time and sales and level 2, but mainly time and sales, and you could look at the tape and tell what was going on. So on Twitter, we were sitting there watching at, let me see what price was. I think it was at 80. Yeah, 27.80. And we were watching so many orders go through, and time and level 2 never changed. It barely changed. When I say never changed, for the amount of orders that were going through on time and sales, level 2 looked like it was standing still. And so you know that was huge. And that was a clear sign that this thing was about to bounce. But, you know, maybe I was stubborn a little bit, you know, holding out to see what it was going to do. But, you know, we knew what was coming. And when it's slow, it's easy to point out little things like this. you watch it, you put it in your, file it in your notebook. So the next time you see it, you can react to it, or you can be ready to react to it. And that's what this is all about. You know, that's why, you know, I started over with a small account. There are things that you guys, you know, watching videos and stuff, you just can't get. You have to watch trading live. You got to watch somebody actually trading and navigating the market live. You know, not somebody calling out trades and all of that. You actually have to see it happening and feel what's going on. And that's why I'm doing this. So we'll be back at it tomorrow, you know, bright and early, and we'll see if we can do some good tomorrow. So you guys have a great night, a great evening, and I will get with you on tomorrow.